Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners most weekday mornings at this time, 8 o'clock Central. Today is Thursday, April 20th, 2023. During these daily trainings, we talk about strategies, tips, techniques, share success stories, and we're here to support each of you. And so today's topic is an interesting one that I think will generate a lot of interest and maybe, hopefully, a lot of questions or feedback. But we're going to take a contrarian approach today. So if all's going well, my screen shared. And our topic today is don't borrow money. Instead, turn receivables into cash. So we're going to talk more about what that means and how that could work. The premise or the introduction is the truth is most of us tend to act upon the knowledge that we currently have, and we tend to hang around people, friends and family, that are similar to us. And so it can be easy to overlook the fact that other people may have other ideas, sometimes better ideas, but we're just not exposed to them. So the premise here is there are some wealthy people that leverage some concepts, financial concepts, that frankly, a lot of people don't know about. And that doesn't make them questionable or inappropriate or illegal, just means that some people know some things that other people don't. One example of that, and there's many examples. So before we dive into our topic, well, what's an example unrelated to today's material? Section 179 expense, and we got Terrence on here as a CPA, right? Section 179 of the IRS code allows you to go buy certain qualifying vehicles under your business name, under your EIN that doesn't show in your personal credit, and you can deduct 100% of qualifying vehicles up front. So let's say you went out and bought a $100,000 vehicle. Even though you're making payments over 5, 6, 7 years, the IRS allows you legally to write off the full 100,000 now. So that's an unrelated example. But the point is, there are strategies, tips, and techniques that some people know that others don't. And today we're going to go into one of those on how to acquire and liquidate receivables. Now, what are receivables? Receivables are monies that our business is owed. Well, anyone that has an operating business will probably have some accounts receivable, some contract signed, services performed where the customer hasn't paid yet. For instance, I do a lot of consulting with HOAs, homeowner associations. And so I'm working with a new client, a homeowner association, and they had some problems with their board of directors. They didn't have anyone sending invoices out. So the HOA is almost insolvent, not because of broader problems, but they haven't billed the residents that live in that HOA. And so if they haven't billed them, then those people haven't paid. Now the HOA doesn't have money to pay for lawn care for the common area. So receivables could come from any type of business. The HOA example I briefly gave you, you and I could run a lawn service, and we cut, like when they come mow the yard and manicure the yard here where our commercial office is. When the man pulls up in his trailer and his crew gets out with his equipment, we don't run out there and give him some cash or some pesos. He bills us at the end of each month. So, and then we pay him at the beginning of the next month. So for example, even that's an example, a real example of a lawn care service that has receivables. So receivables are monies owed to our business. You can have monies that are owed to your business that are paid on time, or monies that are not paid on time, non-performing. But regardless of that, receivables are an important part of most businesses. Well, as we get to the second paragraph here, if you or a client that you're working with doesn't have their own receivables to do what? To turn into cash, then you can even acquire other people's receivables for pennies on the dollar. And again, some of this may come off as it sounds too good to be true, or I don't understand, or prove it. All right, so let's prove it. Encore Capital Group, which maybe you've heard of, maybe you haven't, They're the largest in the nation at doing this, acquiring and litigating receivables. They're publicly traded on NASDAQ. So what do you know? A company that's publicly traded on a stock exchange is highly regulated, highly investigated, and it would be nearly impossible for them to partake in some activities that are either illegal or inappropriate. So Encore Capital Group does this. Now, are they a small player? You know, are they any good at it? Recently, in 1 year, they had 1.4 billion with a B in revenue, and they made 351 million in net income. So yeah, turning receivables into cash, turning other people's receivables into cash is big business. Maybe you didn't know about it. Maybe some of your clients don't know about it, but that doesn't mean it's not true, because it is true. Couple financial literacy bullets here to hit before we go through. I think lesser sophisticated entrepreneurs may think that their profit margin should be 100%, right? If I sell a t-shirt in my shop for $10, well, I better make $10 profit. Well, that's craziness, right? That's illogical, because you have to buy the t-shirt, or make it, I guess. You have to have the overhead, the rent or ownership of the shop. You have to have staff working there, utilities, insurance, and so forth. So one point of financial illiteracy, which is probably known to you, but others will overlook, is anytime that an entrepreneur thinks that their profit margin should be 100%, that's ludicrous. So even with Encore, they brought in about 1.4 billion in revenue. Was all of that profit? Of course not. Only about a quarter of that, plus or minus. So, you know, if you look at the profit margin of Walmart, you know, it's in single digits. So sometimes you have to educate people that it's unrealistic to think that you won't have expenses of running a business. Almost every business, other than maybe babysitting and dog walking, there's going to be expenses associated with it. That doesn't diminish the value, but we need to have revenue, we need to pay our expenses, and then we want to have net income. So today we're going to talk about how to leverage a similar strategy to what Encore does, but on a very scaled down version. Any questions, comments, concerns, so forth? So far. Okay, so then what we normally do is we build a foundation of who we are and who we help, and then we get into the topic matter. So let's do that briefly. So first, we need to know what it is that you and I do. So you and I, as technical advisors, we help individuals and small business owners improve their credibility to qualify for financing, regardless if it's business loans, auto financing, mortgages, what have you. Normally, we use the credit and funding program to do that. Guarantees anyone a minimum of $100,000. Too good to be true? Of course not. It's going to the core of the problem. We help people become credible on paper with their 3 C's: credit, collateral, and capacity. Now, what you probably already can infer is that when we're talking about receivables play a role across the board, I should say, across the board in our 3 C's, can actually impact us in all areas, but we'll get back to that. So obviously our program's proven legal and effective. Really, the only people that tend to question these techniques and strategies are individuals that are either financially illiterate. And I don't mean that negatively, but just they don't know. And so if they don't know something, they think it must not be true. Or some people are just flat out malicious. I didn't plan this in the preparation for this morning, but you can put this to a litmus test. So for example, if you think Encore Capital Group is bullshit, then you can go look them up and you can validate these things that I'm saying. That's fine. If you want to go validate this, go talk to some wealthy people and ask them about leveraging receivables, because there's a very good chance that if you talk to wealthy people, they'll say, yeah, either they do that or they know about that. If you don't know where to reach wealthy people, here's the best kept secret. Go to a car dealership. Now, this is going to sound awkward, but you can test this again and prove me. Well, you can't prove me wrong. It'll validate what I'm saying. Go to a car dealership, go to the front desk and ask, I'd like to go into the VIP waiting room, please. Car dealerships have two types of waiting rooms. The general public, where you see people sitting around for their oil changes or their tire rotations or waiting for their new car to get polished and processed for release. And then there's the VIP waiting room. So I know when I go into the Mercedes dealership, I have them let me into the VIP waiting room. So the VIP waiting room has this nice little bar with caffeinated drinks and soft drinks and liquor, snacks and food. That's the VIP room. That's where you're going to find these wealthy people. You know, if you sit around and go to the Hyundai dealership and talk to the people in the waiting room there, they probably are not familiar with how to acquire and liquidate receivables. But if you go where the wealthy people are, these are concepts that segment of the population are aware of. And just because others don't know about it doesn't mean that it's not real. It is real. All right, so we've confirmed, we've done our introduction. We've confirmed what we do. You and I are technical advisors, and we help people become credible enough for funding by addressing their 3 C's, guaranteeing at least 100,000. Now let's understand our target audience. So we love to work with imperfect people, and we don't mean that from a personal perspective, but we mean that from a credibility perspective. We love working with people that have money issues, credit issues, collateral issues, because these are the individuals that have problems with their 3 C's. They don't qualify for funding. They're kind of locked out of the financial system. So what do you and I do? It goes back to here. We help them become credible on paper, so they move from being imperfect to perfect, or at least perfect enough to qualify for at least 100,000. So that's our target market. All right, so before we dig into our real topic today, anyone have questions on the introduction, on step 1 or step 2? Okay, I think we're rolling forward. So let's get on into our topic, step 3. A simple process to acquire and liquidate receivables to put money in your pocket or your client's pocket. I realize that you all are distribution partners. You're either affiliates and or white label partners. And it may very well be that your primary focus is helping other people. And that's great. Others of you, your primary focus is to help yourself, to generate income by helping other people. It doesn't matter. They both work together. So we're going to go through a 4-step process. Now, we have to have a disclaimer. If you already have your own receivables, then you can just skip to step 4, which we'll get to. Let's take Mr. Barchi, who's on the line. Mr. Barchi is a white label partner of ours, been a white label partner for quite some while. He already has receivables. He doesn't need to worry about acquiring receivables. Others of you may not be in that same position. But regardless, let's go through the 4-step process, 4 options to liquidate, and then we'll open it up for conversation. All right, so again, if you don't have receivables to liquidate, then we can get you receivables, and you do that on guaranteedfunding.org quick cash. There's a simple form to complete, and then we'll send you the quick cash Adobe packet to review and complete. We've had lots of enrollment in quick cash, and we're processing those at a pretty good pace. Had one person that filled it out, this form, at 1 a.m. this morning, and they were barking at us this morning that they hadn't been processed yet. So, of course, most of us tend to sleep at night. But regardless, step 1, go to the website, complete the simple form, which we looked at and focused on yesterday's training. Then we'll send you the Adobe packet. What's all this about? Well, the point is we're going to transfer real receivables, because the concept here is to liquidate receivables. If you have your own receivables, like Mr. Barchi, you don't need to do this. But if you don't have your own receivables, then you can acquire receivables to liquidate. And I would argue this is a better strategy than borrowing money, because it's money you don't have to pay back and there's no interest associated with it. So once the Adobe packet comes over, then we'll transfer 10,000. It's called a portfolio of $10,000 of real receivables. We talked more about this yesterday. There is a title transfer fee, and I'll have some people say, well, why in the world would I have to pay to transfer the title of this asset? Well, we need to establish consideration for the purchase, and that you really, or your client is really the owner now, right? Because it's like me going and taking out a loan on your home, a home improvement loan on your home, and I get the money. Well, that's not permissible, right? That's your asset. I can't be using your asset for my financial gain. That's not only inappropriate, it's illegal. So we can't just say, oh, Carlos, yeah, you got some receivables, go do something with them. That's not appropriate. We need to transfer ownership legitimately in this example to Carlos. And so just like if, even if I gave you a free piece of property, or you gave me a free piece of property, we go down to the title company. The title company is going to charge a fee to legally document that transference of ownership. That's the way assets move, whether it be real estate or cars or receivables. So if you already have your own receivables, you skip to step 4. If you don't, then the first 3 steps are what's relevant. Timothy's asking, can you get more than 10,000? And yes, we talked about that yesterday. We've had 3 or 4 people now buy in excess of 20 portfolios. So if you take 20 times 10,000, that's about 200,000, right? Okay, now let's drill in. What do we do once we have the receivables? Because having the receivables is valuable, right? We're able to put them on our balance sheet or our personal financial statement to increase the value of our business or our personal net worth, depending upon which document you're putting on. It improves our liquidity, because the definition of liquidity is cash plus cash equivalents, but ultimately we want cash, right? So the receivables is the asset that we're going to convert into cash. Another example, real estate, right? You could go out and buy a piece of real estate, or you could be given a piece of real estate. That's a true asset that builds your wealth. That's thumbs up. But is that cash? Is that real estate cash? Well, if you use it to farm or what have you to produce money, it could produce income, but the asset itself is not cash. So if what you want is cash instead of a non-cash asset like receivables, then what do we need to do? We need to liquidate. There are 4 primary ways to liquidate receivables, and we're going to go through those now. One of which is you can factor them, and that's what our training was on yesterday. We just announced a new strategic relationship with a lender. That lender will factor invoices. So if you have, let's say you have a $10,000 invoice, will they factor it? In other words, will they give you $10,000 for it? The truth is no. They take a 3% fee. So they would send you 97%. Some people don't like that. Well, if you don't like that, then don't factor. But typically factoring companies are going to charge a fee because they're providing a service. They want to make a profit too. So factoring is one of 4 options, not the only option. Receive 97% in 1 to 2 days. Alfred asked a couple specific, very good questions about this yesterday, and then he and I talked after the Zoom as well. He asked, is the quality of the invoice, does that impact the factoring percentage? So in other words, if the person that owes you money or the business that owes you money, if they're more or less credible, does that impact how much you get from the factoring? And through this new bank, the answer is no. No, they're giving everyone 97%. They're charging everyone 3% after it funds, nothing out of pocket. Okay, so this is just one of 4 options. It's not the only option. It's probably an attractive one, but it's one of the 4. Another option that you may want to consider if you have assets that you want to liquidate, receivables that you want to liquidate, is we can litigate. So there's a difference, of course, between liquidate and litigate. Litigate means using the court system to collect, and often that could be 100% or more of the receivable amounts, because now you can sue for late fees, court cost, and so forth. So now you can start to see some difference. Here, we're only getting 97 cents on the dollar. You're giving up 3 cents on the dollar, you know it up front. Here we have the potential of getting 100% or more. Third is just simply to collect, and usually that can be done internally. You know, if you have your own staff to collect money that's owed to your business, which may be something that you do, or the other is to use a third-party collection agency to collect that amount. And then the fourth way to liquidate receivables is simply to flip it for a profit. And we see this in real estate frequently. People will come to us, they want funding to buy a certain property with the clear intention of not holding it, but to turn around and flip it at a profit. So this is how the strategy of acquiring and liquidating receivables works. If you already have your own receivables, great. If you don't, then we can get you receivables. And then from there are 4 primary strategies to liquidate. So I'd like to pause here, and I know that Sonia had sent an email I don't think we've even responded to yet, which we will, Sonia, but who has questions, comments, concerns on these 4 different liquidation strategies? All right, so Terry's talking about the collection. So, you know, my background was in healthcare management. And so think about hospitals. So hospitals provide services, often very expensive services. And some people have third-party insurance, some don't. But if the individual does have third-party insurance, then there's a department that works with third-party insurance collections to go chase that, to bill properly and chase down that money owed from Blue Cross or Cigna, United Healthcare, Aetna, what have you. And then there's often a different team that works on collecting the patient balances, the patient portion. And so most hospitals and hospital systems will do some initial collections in-house, and then they'll usually then move to a third party for one of these strategies. Hospitals may factor the receivables, they may litigate the receivables, they may use a collection agency for the receivables, and some of us have even seen collection accounts pop up on our credit report because of that. And then they could also just sell the receivables. So again, nothing that we're talking about here is inaccurate, of course, or illegitimate. It's really not new information in the business world, but I think you're going to run into a lot of clients that just aren't familiar. They don't have the financial literacy in some of these advanced topics. So that's why we're discussing it today. So who else, thank you for that question. Who else has questions on 4 ways to liquidate receivables? Because again, it starts with looking at your own financials, your own balance sheet. If you already have receivables, money's owed to you. Take Mr. Ryan's here. He and I were talking a day or 2 ago, might have been 2 days ago. Mr. Ryan's, I believe, is owed over $500,000. So, you know, I was kind of forward with Mr. Ryan's. Man, we need to liquidate. You got over $500,000, Mr. Ryan's, that you're sitting on. We need to use some combination of these 4 to liquidate. And I'm not talking about Mr. Ryan's now. I'm moving on to a different topic. I have some people that contact me and they're hurting for money. They're hurting for money. Sometimes they don't have enough money to pay their bills and do the things they want. And then we look at their financials and they're owed a lot of money. And it's like, how can that be? You've got to collect the money that's owed to you. And these are the 4 common ways. All right, does anyone else have any questions? Let me recap and then we'll wrap up. So today's topic was don't borrow money, turn receivables into cash. We explained that some people know about some financial topics and strategies and techniques that other people don't know about. And just because someone doesn't know about it, it doesn't mean that it's illegitimate. It just means that maybe you just don't know. And one example of that is knowing how to acquire and litigate receivables. And we talked about if you don't have your own receivables, you can acquire other people's receivables. And we used Encore as a case study, right? Encore is publicly traded and they do this. Encore brings in about 1.4 billion a year in revenue doing this. Their profit margin is outstanding. They had 351 million in net income. So what a tremendous opportunity to leverage some financial concepts that others have proven are profitable for the average person. As always, we go through and revisit who we are and what we do in terms of technical advisors and our target audience. But our main focus today was, in fact, here, how to acquire and litigate receivables to put money in your pocket or in your client's pocket. We said you can skip the first 3 steps if you already have your own receivables, like Mr. Ryan's and like Mr. Barchi. But for the rest of us, we can go complete the form on guaranteedfunding.org quick cash. We'll send a quick cash Adobe packet. We'll transfer real receivables. And again, our biggest portfolio, so this is a $10,000 portfolio. The biggest portfolio we in-house ever sold is a $3 million portfolio to a law firm in Austin, Texas, right? So this is real. So it's okay if it's new, or it's okay if people are skeptical, but if we stop to learn what we're discussing, it's real and it's legitimate and it's credible. So what we can do is break down portfolios in a very small package that makes it manageable for normal folks. They would pay a title transfer fee, which we talked about the reason for that. And then we work with them to liquidate. And they can, of course, we'll get it on their balance sheet, so it helps their financials immediately. But then we want to move into liquidation. And frankly, we could do one or some combination of these 4 items. We could factor it. Again, the downside of it's fast. So, good side of factoring, fast, 1 to 2 business days. Downside, they will not factor 100%. They will only pay 97 cents on the dollar. That pisses some people off. We have people that sometimes curse at us because it's like, why won't they factor 100%? Well, because they want to make a profit too. But it's just one of 4 options. Another is to litigate. Another is to collect in-house or externally. And then the 4th option is to essentially resell it, flip it for a profit. If you have questions, comments, concerns, we're here to assist. All right, Timothy's asking about how he monetizes this. And we covered that on a training, I think it was on the 14th of April. So I always encourage you all to go back and consider going to our YouTube channel, Business Paralegal, and watch past trainings. But just to answer Timothy's question. So if you want, there's really a simple way and a complex way. And we've learned typically people want simple. But the simple way to make money by helping others with this strategy is you collect the title transfer fee from the client, as well as a administrative processing fee, which is your portion. Normally you charge them $200. You keep $100, send us our part for the title transfer fee, as well as the email address of the client, and then we'll take it from there. So that's a nice, simple $100 in your pocket and less than an hour's time. So we say that, earn $100 an hour. So that's the simple way for you to monetize this and helping others. And again, we've had a number of you that are doing 10 or more of those a day. So that certainly is working. The more complicated, which I'll just introduce because most people aren't ready for the complicated, is you can actually buy a larger block, and you would buy it at wholesale, which is cheaper. and then you turn around and resell it at retail, which is the higher price, and you make the margin. So you'd make a whole lot more than $100 an hour. But let us know if you're interested in doing that. That's a more advanced topic that I don't want to spend too much time talking about, because most people want simple. Simple is collect $200 instead of 99 from the client. You keep 100, send us 100, send us the 100 and the email address, and then we'll implement starting with step 2. So in other words, you pitch it, you sell it, you collect the money, you send us our half, and then we implement. You have no other responsibilities. All right, well, there's the topic for today. Don't borrow money, turn receivables into cash. We'll see you back tomorrow morning. Thanks, everyone. Bye-bye.